So revising periodic depreciation. Remember, this is what we said, and as I said before, sometimes in theory questions you might see these type of questions. But as we know that depreciation is an estimate, right? Useful life is an estimate. Depreciation, calculation of depreciation is an estimate. So estimate might be less or it could be more, right? So you have to make an adjustment, right, for depreciation, because depreciation is, we are using estimation, right? In accounting, it's an accounting process, but we are using estimation. So in real life, management, what they are doing is periodically they review the annual depreciation expense, right? So sometimes you find out that due to wear and tear or obsolescence, that annual depreciation estimates, they are not correct. Either they are less or it is more than it should have been. Then you change the amount of depreciation expense. Let's say you bought something in 2017, but in 2022, this year, you find out that, the estimation of depreciation need to be changed. Okay, so then what will happen? You will not go to the previous year and make a changes. Okay, so you don't change the depreciation in previous years, right? Otherwise, it would affect financial statements in previous years. So what you will do is, if you think that in future it has to be changed, so you change it now, and in the future year, we don't make changes. Okay, and it is not considered as an error, right? And you have to use a step-by-step approach to calculate depreciation expense. First, you calculate new depreciable cost, and then calculate with whatever remaining useful life is left. Let's look at this example. Yes, any question? Yes, anyone? Any question? Yes, please. I need a response. At least I want to know that you are getting my questions. Yes, can you hear me? Okay, thank you. Yes, thank you. Please, when I ask question, so reply to me. Sometimes we don't know, something could wrong with the internet connection, so voice not clear. So I'm repeatedly saying that whenever I ask questions, so please reply. Okay, thank you. Now, Arcadia HS purchased an equipment. This is the example we are looking at for 510,000, which was estimated to have a useful life of 10 years with a salvage value of 10,000 at the end of that time. Depreciation is recorded for 7 years on the straight line basis. Now, in 2015, year 8, it is determined that the total estimated life should be 15 years with a salvage value of 5,000. And question says, what is the general entry to correct the prior year's depreciation expense? Now, what happened? Try to understand the situation, right, where we are revising our depreciation, right? Under this scenario here, what we are looking at it. What will be the journal entry? Yes, please. Who will tell me what will be the journal entry? What is the situation here? It says here that before we think that the life of the asset is 10 years, and that's how you record it until year 7. And in 7, after 7 years, you find out no that the life of the asset is not 10 years, it should be 15 years. Okay, so it means you have to make an adjustment to the depreciation expense. The question says here, what is the journal entry to correct the previous year depreciation? What is the journal entry? There is no entry. Remember, we said that you cannot go back to the previous year. So it's an important question. Is it clear? So there is no journal entry to correct the previous year depreciation expense. Okay? Now, what is the depreciation expense for New Year's, right? Remember, for 2015, when we change our estimate. Okay, so now what will be our depreciation expense, right, for this year? Yes, please. Now understand before I show you the solution. Now, what will be the depreciation expense in 2015? First of all, you need to find out uh, what is the depreciation we have. What is the number given? 510,000 is the cost. Okay, and salvage value, this is what you have done before. And the useful life was 10 years. From these three numbers, can we calculate depreciation under straight line method? Can you give me a depreciation? What will be the depreciation? What will be the annual depreciation? Who will give me annual depreciation? Yes, 510, thank you, minus 10, 500,000, divide by 10. So what will be the depreciation for 1 year? Annual depreciation, Sanvi. 50,000, yes, thank you very much. So if, for example, if you have a depreciation which is 50,000 per year, let's say if I have to write it down, so I will say 50,000 in year 1. This is for year 1. This is the depreciation. What will be depreciation in year 2? Same, remember. Year 3 is same, 50,000, 50,000 until and unless you reach 2015, which is 8th year. So in first 7 year, the depreciation is same, 50, 50, 50. So what will be the total depreciation in 7 years? What will be the total depreciation in 7 years? In all 7 years, this is what we used to record. 7-year depreciation. It will be how much? Total depreciation in 7 years. 350,000. Yes, thank you, Faris. Thank you, Abdulaziz. Thank you. 350,000. Okay. So after 7 years, what is the book value? So 7-year total depreciation, or we call it accumulated depreciation, is 350,000. This is the total depreciation. Book value will be, what will be the book value after 7 years? Let's say today is 2015, which is, how do we calculate a book value? How do we calculate a book value? So let's say I calculate a book value after 7 years. Is cost, what is the cost? 510,000 minus, not minus total depreciation, accumulated depreciation, remember, minus 350,000, right? So it will be 160,000, right? Is it clear? Okay. Now see, now you realize that no, this depreciation should, our book value now is 160,000. So in order to revise this depreciation, it should have been not this one. So now we'll see, okay, what should be the new salvage value? Now you just consider it as a new estimate. Now you say, okay, we will, we have to revise it. We have to correct the this one. So under new correction, so basically what will be the salvage value after 15 years, means after remaining 8 years. What is the salvage value? 5,000, please, is given. So it means in 8th year, if you are calculating a depreciation, right? So in 8th year, can I calculate it like this one? Now what will be my depreciation in 8th year? Can we calculate? Year 8, what will be the depreciation? And in year 8 or in 2015, just consider it as a new question. So our remaining book value is 160,000. And what is the salvage value? 5,000. So 160 minus 5,000 is your depreciable cost. And then you divide it by the year, and I'll show you the solution now. This is what we have done so far already. Equipment cost 510 minus 10,500 divided by 10 multiplied by 7. So first you establish a new book value, right? And what is the book value? Which is cost, this one, minus accumulated depreciation. So this is what you have, your net book value. We already discussed it. This is what it is shown on your balance sheet after 7 years. Next year, from 2015, when you are going to revise that depreciation, what will be the revision? 160 after 7 years. This was before. Now this is now after 7 years is done. This is our depreciation expense for 2015. Book value minus salvage value, the revised salvage value is given. So depreciable basis is 155 remaining, life is 8 years. 155 divided by 8. Is this number correct? 19,375. Is it clear how it is calculated? Okay. And then you make a journal entry for 2015. That what is the journal entry for 2015? You'll say depreciation expense, and accumulated depreciation is like this one. Is it clear? So sometimes in questions in exam, you may be asked just to make a journal entry for 2015 based on the given information. So you have to do the calculation and then make a journal entry. Remember, we are doing accounting. Before the accounting, you have to do some calculation. This is how you, what we have done here, we revised the depreciation. Based on given information, we revised the depreciation. Is it clear now? Yes, any question? Okay. Let's see. If can you solve this question now? I need everyone to solve it. What will be the answer of this question? Take out your, no, I will ask this question to everyone to solve it. Chamber Corporation purchased a piece of equipment for 36,000. It estimated a 6-year life and 6,000 salvage value. Straight line depreciation was 5,000 per year. It is already given, right? So what they have done, right? Depreciation is given. 6 year is the life of this asset, right? Let's say year 1, That's how you calculate depreciation. Remember, this is the schedule. Depreciable basis. What will be the depreciable basis for this question? Who will tell me? What will be the depreciable basis or depreciable cost? How do we calculate depreciable basis? We are finishing the topic. Yes, you have the slides, right? Badr al-Ahmadi. Badr, are you there?
Yes, Doctor.
Yes, what is the depreciable basis?
50,000.
It is 36 minus 6. Basically, this is what we call it. Remember, 36 minus 6 is what you call it depreciable
Yeah.
basis. This one here, 36,000
Minus
minus,
6,000.
yes, 6,000. This is how it is, right? Okay. Then you have annual depreciation. Remember, next one, after this one, you have your annual depreciation. It's already given. I'm just helping you how to solve these questions. Any questions? Annual depreciation will be how much? Annual depreciation is this one divided by 6 because it's a 6 year, right? Which is 5,000. Is it clear? What is our total depreciation, accumulated depreciation? In first year, it's the same, right? And then we have to calculate our book value, which is cost minus accumulated depreciation Is it clear? Okay, now what will happen? See, in this scenario, see, straight line method, look at the question, 5 was 5,000 per year. Okay, at the end of 3 year, right, before the depreciation for adjustment, it is estimated that the new life should be 10 years and the new salvage value to be 10,000. Now this is what they are saying. So now we have to make the adjustment. What will be the adjustment? Remember? So what is happening? Try to understand the question. Second year, what is the cost? Same thing. Depreciable basis is same thing. But annual depreciation is 5 plus 5. Sorry, annual depreciation is also same thing. Total depreciation is 5,000 plus 5,000 this year and previous year. So 10,000. Book value. Until this point, is it clear? Okay. Now at the end of year 3, understand, end of year 3 meaning before making adjustment. So you have to see the wording, what it says. Always in the question, it says end of the year 3, before depreciation adjustment, it estimated that the new life to be 10 years. So it means for third year, you have to change the depreciation. It should not be 5,000, it should be something else. Okay. Now that one, it has to be calculated again. Is it clear now? Now what will happen in third year? Right. So first of all, you have to know what is the book value, right? And how much is there. So now book value is 26,000, remember. And now with your estimate, you are saying that salvage value is 2,000. Now you have to calculate in third year a new depreciation, right? So for new depreciation, what will happen now? So you have to say, okay, my depreciable basis is 2,000. So you have to see what is your depreciation now. What will be the depreciation? Can you calculate? First of all, let me ask a question. What will be the number here in depreciable basis? What will be our depreciable basis? How do we calculate? You should know how to calculate. Yes, Hazrat, thank you very much. Yes, how do we calculate? Why 34, Abdul Aziz? I'm saying what will be depreciable basis? You have to understand. Here, what should be the answer? Imagine now, it is now means you are just like a new question in year 3. What is the remaining book value before starting of year? Yes, Haza, thank you. Thank you very much. Is it clear, Abdul Aziz? It should be 26 minus 2000. So you'll say 26,000 minus the new salvage value, which is 2000. Is it clear now? Now from here you'll see what is the remaining useful life. Remember what the question says, that before we said that life is 6 years. Now you're saying no, not 6 years. Now you are revising your schedule. You're saying not 6 years, it is when you are doing until when you reach here, you are changing your estimate. Instead of 3 years, you say no, it is now 10 years. So of course here we will not make any change. Changes will be here. Now what will be our annual depreciation? What will be the number here? What will be the annual depreciation? Who will tell me? What will be the annual depreciation? What will be annual depreciation in year 3? Yes, can you hear me? Am I audible? Yes. What will be our annual depreciation? How do we calculate a depreciation? Depreciable basis divided by the useful life. What is the useful life now? How much is remaining? 8 years. Remember, 2 years are gone. So this one from here to here, you can calculate how many years you have. 1, 2, from here you can calculate. There are 8 years. So it means our annual depreciation is 24,000 divided by 8. Is it clear now? Okay. Now let's continue this one. What will be the number here? What will be your total accumulated depreciation? Your total accumulated. What will be the total accumulated? What will be the number here? 10 plus 3, 13,000. Yes, thank you. It is 10 before. Our total depreciation for 2 years is 10 plus 3, so it will be this one plus is it clear now? So what will be the cost? Cost stays same, 36,000. So now our book value will be is it clear now? Now if you continue with this one, right? What will be now our annual depreciation after this one? Always it is same, right? Now depreciation expense after this one, it will be same, right? For each one, for each year. it's going to be same. And for year 4, same thing for cost. This one also stays same. Let's check our answer. Accumulated depreciation. For next year, it should be 16,000. Let me see if the formula works. Yes. 13 plus 3, 16. Next year, 16 plus 3, 29. Next year, 19. And until you reach 34, right? Because what we said, remember, our final answer should be, what should be the book value here? Without doing calculation, what should be our answer here? The book value? No, what is the salvage value in this question? After 10 years, salvage value to be, see the question, 2000, right? It should be 2000, right? How do we calculate a book value now? For year 4, 36 minus 16, right? And if you put it, yeah, now you can see this is your schedule. Is it clear? Okay, so try to practice. As I said before, without practice, it's difficult. Try to practice these questions. So you can solve a questions just like this one. There are questions in book, practice questions. Please go there and practice. As I said before, we cannot solve all the questions, so you can see these questions in the book. Multiple choice questions, multiple choice exercises in exam, it will come from there. So have a good practice. Without practice, it is difficult. That's what I'm keep on saying from my first class. Is it clear? How can we calculate a revised depreciation? Let's move to our new slide. Next one, another part. After a plant asset, after a useful life of 10 years, what will happen? Remember, when 10 years pass, what will happen? How you will dispose the plant asset? What are the accounting entries basically? There are 3 ways for retiring an asset. It is retirement. Retirement means you just remove the asset, retirement. Okay. Equipment is scrapped, right? Or just discarded. Okay. This is the one way. Or you may sell it to someone else. You sell it to another company for some amount. Okay. Let's say for selling, remember, pay attention. If you sell it, what you need is you need book value. What is the book value and how much you are selling? If the book value is 1000 and you sell it for 1200, so it means there is a gain. That's what we said. If the book value is 1000, you sell it for 600, so there is a loss. So whenever you sell an asset, you have to compare it with its book value. Okay, so I'll say here, compare with book value. And by now you should know what is the book value. Same thing, also you do it when you exchange the asset, means you take one asset and exchange it with another. Just give your old car and take a new car, exchange by paying some extra amount. Again, for that one, whenever you exchange happen, so you have to see how much cash is paid, and again, what was the book value, what is the discount you get. That one you compare it with the book value in both these scenarios. So what you will do is, in terms of accounting, you will record a depreciation up to the date of disposal. Before that one, you record. Then, if there is any accumulated depreciation account, you have to remove it by making accumulated depreciation as a debit account to make the balance zero, and creating an asset account. Okay, is it clear? Okay. Now, how can we retire a plant, retirement of a plant, when you just retire it? Retirement means just you throw it, right? You did not pay any. See, this is what we are saying. Retirement means no cash is received. You did not get any money. You just throw your car in a desert, in Haraj, or in scrap. So in that case, what is the entry? You have to decrease the asset account for the cost in the asset credit, and you also decrease accumulated depreciation, which will become as debit. So I'll explain with one example on next slide. See here, this Hobart Enterprise retired its computer printers, which cost 32,000. Accumulated depreciation is 32,000. Prepare the entry to record this retirement. So before this entry, your balance is like this one. Remember your T account. This is for equipment. This is our T account balance for equipment on equipment, right? Which is an asset account. So it has a balance of 32,000. Okay, this is the T account. Same thing also for accumulated depreciation, equipment, and it had a balance before. Accumulated depreciation always has a credit balance. That's why we're writing on the credit side. This is in terms of accounting. That's how it is there. Now, since you are selling this asset, so this should have a zero balance, right? So zero balance means accumulated depreciation should be credit, because this number then will come here. When you post it, it will be here. So at the end, your balance should be zero. And then equipment is credit, and when you post it to T account, it will have a zero balance. So this is what you are doing. What we are doing, we are retiring a plant asset for its retirement. Is it clear now? Is it clear? Yes, why we debit equipment? Yes, because we are closing. Remember, in math, in simple math, you should have equipment is zero. It's because you retire it. In your account, it is zero. This is the reason. Not debit, it was credit. First of all, I'll show entry because it was not showing correctly. It is like this one. This is the entry basically. On the screen, it was not showing correctly. This is the entry to close. Remember, we normally equipment, because we are selling the equipment is decrease. Okay, what is the entry? To record the retirement, disposal of equipment. Is it clear now? Okay, Haza, it's clear. Now, what happens if a fully depreciated plant asset is still useful to the company? Another scenario. Now, what will happen if it is still useful? What we are going to do? Right? Now, in this scenario, let's say it is, the asset is fully depreciated, but still, you calculate all the depreciation, but still there is a life of the asset. Still, you can use it. It's still usable, right? And you already fully depreciated. This is a very important question for theory. The question says, what happens if a fully depreciated means you depreciate everything? Like after 10 years, it is depreciation, okay, it is equal to salvage, okay, everything is done, right? It is still book value is zero, but still you can use the car, you can use the equipment. So in that case, what you are going to do is we will not do anything. We continue to use it, but no depreciation will be recorded. This is the case. Clear? So you continue to use the asset with no additional depreciation to be recorded because asset is fully depreciated. Okay. Now another question. What is the journal entry? Try to solve it. Sunset company discard delivery equipment that cost 18,000 and has accumulated depreciation of 14,000. What is the journal entry? Can someone give me an answer? First of all, just let me put a question this way. Rakan Al-Ghahtani. Rakan, are you there? Rakan Raid Al-Ghahtani. Rakan, are you there? I'll mark absent. This is not acceptable. If you want to leave the class, you may leave, but virtually, if you are there, it's not acceptable. Abdullah Al-Aqil, are you there?
Yes, doctor.
Yes, thank you very much. Yes, Abdullah. Here in this question, it says here that you have a delivery equipment which cost 18,000 and it has an accumulated depreciation of 14,000. First of all, can you tell me what is the book value of this asset? Abdullah Aqil, what
75.
is the book
75
value? No, book value.
book value.
Book value, what is, how do you calculate a book value, which is cost minus
Minus expense.
accumulated depreciation. Understand the word. It is accumulated depreciation.
Yeah.
Yeah, so what is the book value? 4,000, right?
Yeah.
Okay. Now see, in this scenario, what happens is this company discard means you just throw it, right? So when you discard it means it is no more usable, but still it has a book value. It has a value still which is not yet being considered, right? But since it becomes a scrap. So first of all, when you record, what is the entry? What will be debit? What will be credit? Whenever you discard an asset, always you have to close his accumulated depreciation account. Okay, closing an account means the balance should be zero. Okay, if you have this understanding, then solving these questions is easy. What is the accumulated depreciation account? Normally we have credit account always, right? So credit account is 14,000 is given, but now we are going to close it. In order to close, so accumulated depreciation will be debit for that amount always. When you record accumulated depreciation, before we used to credit, okay, but when you retire an asset or when you discard an asset, you have to close the corresponding accumulated depreciation account by making a debit entry. What will be credit? Credit will be equipment, remember. What will be the credit entry? Can someone tell me? Usama. Usama Abdul Munim. Yes, Usama, are you there? I will remove you. This is Yusuf Saleh. Are you there?
Yes, doctor.
Yes, Yusuf. Now, in this question, what will be credit? Which account? When you retire an asset, which account to be credit? Which account we are going to close? We are
Um,
closing equipment. Remember, equipment, right?
yes,
So, how to close an equipment, right? Normally, equipment has a debit balance of 18,000. Now, in order to close, it should be credit, right?
yes,
18,000. Okay,
yes,
but
doctor.
debit and credits are not equal because we have a loss of a value. It was there, but we are not using. We are throwing our asset, right? So this is how
Yeah,
you should record loss of 4,000 on debit side and equipment. Now it is clear.
right.
How you calculate this loss on disposal of plant asset? You compare, you look at a book value. Remember, it was a book value. There was a value of the asset still to be used, but we just discard it. So basically we have a loss of 4,000, and loss is considered as debit because loss decreases the owner's capital, and decrease in owner's capital is debit. This is very basic accounting. Now
Yes.
this loss on disposal will be reported in our income statement as other expenses and losses in that section of income statement. So loss of 4,000 will be shown as other expenses and losses in the income statement. Okay, is it clear now?
Yes, yes, it's clear.
Now another scenario is sale of plant asset. Instead of retiring, you sell that asset to someone else. You sell it to someone else, other country. Remember these scenarios. I'm just showing you this picture. This one here, remember. One was the retirement of asset, one scenario. What are the accounting entries? This is what you need to understand. If you retire an asset, what is the entry? If you sell an asset, what is the entry? So if you sell an asset, what is the entry? This is what we are going to see in this scenario. What you do is you compare the book value, and you should know what is a book value. It is cost minus accumulated depreciation. What is the value of an asset at the time of sale? How much it is being depreciated and how much value is left. Then you compare that book value. If it is exceeded the book value, if let's say book value was 10,000 and you sell something for 15,000, so it means there is a gain on disposal. Or if you sell it at less than the book value, then you have a loss on disposal. Let's look at this example. On July 1, 2017, Wright Company sells office furniture for 16,000 cash. The office furniture originally cost 60,000. Okay, so what this company is doing, you have an office furniture old, you sell it for 16,000 cash. When you sell something, what do you receive? Cash. Remember, 16,000 debit. If I see here, when you sell something for cash, sorry, I will write it down. I'll come to it. Okay. The office furniture originally cost 60,000. Cost of this was 60,000. And as of that date, January 1, 2017, it had accumulated a depreciation of 41,000. Depreciation for the first 6 months of 2017 is 8,000. Prepare a journal entry to record depreciation expense for the date of the sale. Just a minute, I'll give you. Yes, please look at this example. The same one I'm just trying to explain. I just put it here. On July 1, 2017, the Wright Company sells office furniture for 16,000. Office furniture originally cost 60,000. If I have to calculate my depreciation, like what we used to calculate before, 60,000. Let me make some calculation, right? As of January 2017, so it means as of this date, accumulated depreciation was for this question. We don't have the more details, so I just include. So it is, let's say it is, this is what given in this question. As of January 1, okay, as of January 1, it had accumulated depreciation of 41,000. So once we have accumulated depreciation given, we can calculate a book value. Is it clear? Yes, please look at this one because it you have to understand. Yes, I need your response. Is it clear on January 1? Because especially when you solve the question, it is important. That's why I'm using Excel to explain. Now this one on January 1, this is what you have. Now when are we going to sell this asset? What is the date? On July 1, 2017, you sell it. Okay. So when are we selling? We are selling it on 1st of July. 1 July, right? Of the same year. On 1st of July, right? So now what is the depreciation for 6 months of 2017? Now what is the depreciation expense? Not for a full year here. You have to record it because we are up to here from this here. How many months have passed so far? Remember here, it's the same year, but we are selling it within a year. So you have to record a depreciation for that partial year. How many months? A partial, it's not annual, it is a partial depreciation because we have to record a depreciation for 6 months. Again, it is given in this question. What is the depreciation for 6 month depreciation? 8,000, right? Is it clear? Now the question says, understand, very important what the question says, and I can calculate what is my, let's say if I have to calculate my accumulated depreciation on this date, what will be my accumulated depreciation after on this date here? What will be my accumulated depreciation? 41,000, and for 6 months it is 8,000, which will become, okay. So now what will be the book value, which is cost minus accumulated depreciation, right? Remember the date, very important. This is on this date. Is it clear? Now the question says, I'll move back to the question. Note, cost minus accumulated depreciation, not depreciation expense. It is very important when the word you use cost minus accumulated depreciation. Let's move to our so the question says, understand, very important, prepare the journal entry to record the depreciation expense up to the date of sale. Means on July 1, what is the depreciation entry? So you have to record a depreciation expense for 6 months only, which is this one. Is it clear? Yes, please. Is it clear, this entry? Okay, I'll move back to my Excel file again. Okay, if you see here, what is the book value? 11,000. Okay, book value of your furniture is 11,000, but how much we are selling this one? What is the sale value? Book value is 11, we are selling it for how much? Is given. Read the question, first line. 16,000, and we are selling it for 16. Value as a, is it a gain or loss? I will say selling value, just putting it here, is 16,000, right? So my gain so in this case there is a gain, right? What is the gain? Benefit. Gain of this is just a calculation. We have to put the same numbers in the language of accounting. What will be the entries? Actually the same thing, but in the language of accounting, how are we going to put these numbers? Understand the scenario? So what you did, you come, at the time of a retirement, you look at the book value, compare it with the selling value. If selling value is more, you have a gain. In this case, we have gain, right? This is just a calculation. Now, how can we do the same thing in the language of accounting, the same numbers? How to put this calculation? Next space. Is it clear how these numbers are calculated? Yes, please. Any question? Okay. Now you have to record the sale of this asset. First of all, cost of office furniture should be removed from our accounting record. So furniture should have zero balance. So it means furniture should be added for 60,000. Accumulated depreciation. What is the balance in accumulated depreciation account? We already know what is the accumulated depreciation. balance account, you remember it was 49,000, right? We already calculated that one. So you have to close these two accounts, accumulated depreciation and equipment. So cash, you are receiving 16,000, you sell, right? Then accumulated depreciation, you are closing, so it will be debit. Equipment, credit, but if you look at it, still entries are not equal. Debit and credit side are not equal, right? So the balancing item will be gain. Remember, gain is just like profit. Gain, increase the owner's equity, increase the Russell Mal, owner's capital. And increase is always credit, or from here we can see same thing. If it was a loss, it should be on the debit side, like previous question we see. Okay, is it clear? If you have a loss or gain, if you have gain, let's say in the same question, if it was loss, it should be debit first of all, right? Not credit, and then other entries are same. Is it clear? If it is loss, it should be on debit side. Yes, thank you. If you have a loss, like same question here, you may look at it yourself. I just leave it for you. Instead of selling for 16,000, you sell it for 9,000. Same question, same scenario. If you have loss, so it is like this one. If it is this scenario. Clear? Now this one, I leave it for you to solve it. Solution is there, so you can your own practice. Another question for loss. Okay, so I'm stopping here at this slide. I did not take a second break, so we will stop it now. At this slide, we will continue in the next class. Okay. Assignment, you'll find an assignment also in this weekend. You'll have an assignment which you have to submit it. It will be an online assignment, MCQs. Some questions will be there, so you have to practice it until this point. Okay. Assignment will be not a one assignment, you'll have a multiple assignments, and it will be available online. Okay, is it clear? Deadline, I will put it. I did not put the announcement. Now I will put an announcement. It will be there. Just follow on Blackboard. Okay. So that's it. Thank you very much. And if you would like to leave, you can leave now. Thank you.